So here's a question. How do you really make sense of a truly revolutionary technology, like quantum computing, when it's all tangled up with the super fast-paced, sometimes frankly confusing world of investment strategies? It's definitely a challenge trying to navigate these high-stakes, cutting-edge fields.
Welcome to the deep dive. Today we're digging into a really interesting stack of sources you've brought to the table, mostly centered around IonQ, who are the pretty key player in the quantum computing space. We've got this particularly detailed investment strategy report in the mix, and our mission really for this deep dive is to pull out the most important bits of knowledge, the key insights, to make it easier for you to get a handle on what's actually going on and, well, why it matters.
Exactly. And what's quite intriguing about this material is it's not just about IonQ, the company. It also introduces this unique approach to market analysis they call the rhythm analysis method. It promises a pretty different perspective on investment timing. So this deep dive should be a good shortcut to getting well-informed, maybe uncovering some surprising facts, and definitely some crucial context on both the tech and the market side.
Absolutely. And for you listening, figuring out how these reports boil down all this complex information, that's really key to avoiding what the source itself calls overtrading and managing risk efficiently. Okay, so let's unpack this. Let's see what we can learn about making sense of this kind of high-stakes information in a maybe more disciplined way. Right, let's kick things off with IonQ's financials. What's the sort of big headline here regarding their cash situation, their financial stability, especially after their recent moves?
Well, the big news is IonQ recently closed a pretty significant funding round, $1 billion actually, that closed on July 7th.
$1 billion, wow.
Yeah, so that immediately boosted their cash reserves up to roughly $1.68 billion. And this substantial infusion, it really enhances their financial stability, their operational runway, especially important as we're heading towards their Q2 earnings release, which is slated for August 6th.
Okay.
And just for context, their Q1 revenue was $7.6 million, but that came with a net loss of $32.3 million, which, really just reflects how heavily they're investing in R&D right now.
Right. That R&D spend makes sense in this field. So that Q2 earnings release on August 6th, that sounds like a really key date to watch then, directly tied into how they plan to use all this new funding. Given those Q1 numbers, what does this massive cash injection, what does it really tell us about their ability to actually follow through on their, ambitious plans?
Oh, it's definitely a major catalyst, potentially, for price action. And it provides an incredibly strong pro forma cash position. Essentially, it gives the company considerable breathing room. And critically, the resources they need to push forward with those ambitious development and expansion plans, which, in a field as capital-intensive as quantum computing, is huge.
Yeah, makes sense.
It also signals, a fair bit of investor confidence in their long-term vision.
Okay, so that's strong financial footing. That's one piece of the puzzle. But for you, the investor, knowing when maybe to act on that strength is crucial. And that brings us right to this unique approach highlighted in your sources, the VPAR Rhythm Trading Method. What exactly is this method trying to do, and why do they specifically say it helps avoid overtrading?
Right, VPAR. The core idea, as the source puts it, is to capture broader flow timing, and the key is selectively responding only at these key pivot zones. What's really insightful, and the report stresses this, is the idea that markets aren't just random noise. They see them as moving in algorithmic pattern waves.
Algorithmic pattern waves, interesting.
Yeah. VPR basically tries to anticipate these underlying currents, so you can sort of surf the market rather than getting caught up fighting every little fluctuation.
Right.
And that disciplined, selective approach, that's the secret sauce they claim, to avoiding overtrading. It encourages patience, waiting for those high probability setups instead of just reacting to every market flicker.
Okay, waiting for the waves, so to speak.
Exactly. And the method breaks market rhythm down into 3 phases. First, you've got the short-term rhythm. They call this the formation phase.
Mm-hmm.
It's indicated by Bollinger Bands narrowing. For anyone less familiar, think of Bollinger Bands as showing typical price volatility ranges. When they squeeze tight, it often means the price is coiling up, signaling a big move, a directional decision is coming.
Right, like a spring tightening.
Precisely. Then there's the swing term rhythm. That's the weakening adjustment phase. Here, you typically see a brief expansion of the bands, then they stabilize, a sort of pause or correction. And finally, the midterm rhythm is the expansion phase. This is where volatility increases again, signaling that the broader trend is likely continuing.
Okay, that framework makes sense. But the report also mentions using RSI and MACD. how do those more, let's say, familiar tools fit in? How do they strengthen signal reliability within this rhythm analysis? Are they just confirming things?
Yeah, that's pretty much it. RSI and MACD, they're very widely used technical indicators, right? They measure momentum and trend strength. So when you combine them with this specific rhythm analysis, they provide a more robust picture. They help you identify those optimal entry points with more confidence. Think of them as additional filters. They help confirm the strength and direction suggested by the rhythm phases. Adds another layer of validation to the signals.
Got it. So layering confirmation. Okay, so we have this methodology, VPAR. How does it actually translate into concrete, actionable entry and target prices for IonQ based on the sources you looked at? And maybe more importantly, what's the logic? Why these prices? What makes them significant beyond just being numbers on a chart?
Right. So the analysis does give quite precise points for different time horizons, but, and the report really stresses this, all of them require their proprietary TRAP filter to be cleared first.
TRAP.
Yeah, it stands for Trend Reversal Aversion Protocol. It's basically a key filter they use designed to minimize false signals and make sure there's strong trend confirmation before acting.
Okay, so TRP needs to get the green light first. Then what?
Then, for the short term, the suggested buy entry is around $44.50 with a target price of 58 cents. But the entry conditions are specific. TRAP cleared, obviously. A clear rhythm formation showing up. Evidence of order flow buildup, meaning significant buying pressure. And they also add a check on the upcoming Q2 earnings. The source describes this particular setup as a Wave 3 entry. In technical analysis terms, Wave 3 is often seen as the most powerful, impulsive part of a trend, so a prime setup for upward momentum.
Okay, $44.50 by $15 target for short-term Wave 3 logic. What about swing term?
For swing term, the buy entry is lower at $41 with a target of $59, so similar target, different entry. Conditions here are, again, TRAP cleared, but you're looking for a rhythm pullback followed by a recovery. Sustained order flow buildup within what they call an accelerated trend, and also a market type check, which probably relates to overall market conditions. They consider this an ideal re-entry point for what's termed a Wave 4 correction. That's a common pattern, where a stock pauses or pulls back briefly within a larger uptrend before potentially resuming its climb.
Right, buying the dip within the trend. Makes sense.
Yeah.
And midterm.
Finally, midterm. The recommended buy entry here is $33.50. Interestingly, the target for this one is listed as currently unmeasured by their rhythm model. It suggests it's more of a longer-term foundational play, the conditions, TRAP cleared, naturally, a deeper rhythm pullback that then transitions into expansion, sustained order flow, and importantly, broader macro alignment, so the bigger economic picture needs to support it too. This lines up with what they call a Wave 2 retracement. This is described as the foundation for the next impulse. Basically, a significant pullback after the initial move up, setting the stage for potentially the strongest part of the trend, that Wave 3 we mentioned earlier.
Okay, $33.50 for midterm, foundational move. Now, the sources mentioned the current price of IonQ when this was written was $46.51. So how does that stack up against these entry points? Seems like we're currently floating above all of them.
That's exactly right. $46.51 is indeed above all three recommended buy entries, the $44.50, $41, and $33.50. And the report is quite explicit about this. It indicates that the closer the price gets to touching those swing or mid-pivot zones, so the $41 or $33.50 levels, the higher the probability and potential reward, according to their analysis.
So patience is key.
It really suggests patience is needed if you want to follow these specific rhythm-based entry signals.
Okay, let's pivot a bit. Beyond the charts, beyond the VPAR analysis and the funding numbers, what are your sources telling us about what IonQ is actually doing in the quantum computing space? The substance. What's the unique angle and who are they really up against? This feels like where the long-term story is.
Absolutely. And IonQ has made a really interesting strategic move recently, acquiring a company called Capella Space. Now, this isn't just some random acquisition. It's specifically aimed at advancing a satellite-based quantum key distribution network, QKD for short.
QKD. Quantum key distribution.
Yeah.
So super secure communication.
Exactly. They're developing a system to send ultra-secure encryption keys using quantum principles, but leveraging satellites for potentially global reach. This really highlights their ambition beyond just building the quantum computers themselves. It's about the whole ecosystem. In terms of competition, yeah, they're definitely in a hot space. Players like D-Wave and Rigetti are often mentioned. IonQ's perceived edge, according to the report anyway, seems to be its integrated approach combining the hardware, the software, and this network piece. Trying to be a full-stack solution, essentially.
That integrated approach sounds compelling. But how is IonQ being talked about outside the usual financial analyst reports? What's the buzz? What's the community flow or public sentiment telling us?
Ah, the community sentiment. That provides a really fascinating kind of unfiltered look. So on Reddit, specifically the quantum computing subreddit, mentions of IonQ were up 22% month on month. That's from about 4,200 mentions to over 5,100. And the top keywords popping up in those discussions, QKD, Capella, and IonQ itself. So people are definitely noticing and discussing these strategic moves.
Okay, so Reddit's active. What about other platforms?
On Twitter, using the hashtag IonQ hashtag, tweets were up even more dramatically, 60%. Went from 1,100 to 1,760 tweets. Sentiment there was skewed positive, 65% positive, 20% negative, 15% neutral. And key influencers mentioned included accounts like at Quantum Daily and, unsurprisingly, IonQ's own corporate account at IonQ Corp. And then on StockTwits, which is very investor-focused, mentions were up 10% from 3,000 to 3,300 posts. And the sentiment there, measured by bullish versus bearish tags, was strongly leaning bullish, 70% bullish bets versus 30% bearish.
That's a pretty detailed snapshot of the online chatter, and you highlighted the keywords people are using. It's almost like you can see the two sides of the coin, can't you? On one side, all this positive excitement around funding, expansion, network, very forward-looking stuff. But then on the other side, these negative keywords, losses, dilution, risk, real concerns. What does that contrast tell you about the narrative? Is it just, healthy debate, or is there a deeper tension there?
I think it paints a pretty full picture of the public dialogue, actually. This sentiment analysis, it adds a really crucial layer, doesn't it? Goes beyond just what the institutions or the technical charts are saying. It clearly shows that while there's definite excitement about the company's growth, the funding, the strategic stuff like QKD, there's also a clear-eyed acknowledgement of the risks, the financial realities, the losses, the potential for share dilution to fund growth. Those are very real considerations. They're actively part of the public conversation, which suggests a fairly balanced narrative overall. Opportunity, yes, but also caution.
Right. A mix of hype and reality checks.
Always.
Okay, so let's try and bring this all together then. We've got the strong financial backing, this intricate VPA technical analysis with specific entry points, and this quite active community buzz with its own push and pull. What's the overall outlook for IonQ based on all this? And crucially, what risks should someone looking at this really keep front of mind?
Well, the main near-term catalysts seem pretty clear. That huge funding infusion gives them firepower, and the upcoming Q2 results on August 6 will be closely watched for execution. But the risks are definitely there too. Competitive pressures, as we mentioned, are intense and ongoing in this sector. Things change fast, and here's an interesting point the source highlights. While the average analyst rating is technically strong buy, the actual 12-month consensus target price is $41.43.
Wait, $41.43, but the price was $46.51. So the consensus target implies downside.
Exactly. It implies downside risk from the current price, even with a strong buy rating. And that does raise a really important question. How do you reconcile that? A strong buy rating, but a price target below the current price.
Yeah, that's odd.
It suggests maybe a disconnect. Perhaps analysts have long-term confidence in the company's potential, and hence the strong buy, but their shorter-term price targets, maybe based on more traditional valuation models, haven't caught up or don't fully capture the disruptive nature of the tech yet.
That's a fascinating paradox. But okay, you mentioned the report also highlights some pretty strong signs of institutional confidence, which seems to push back against that implied downside risk a bit. What are those indicators telling us?
Right. Despite that consensus target quirk, there are definite signs of institutional conviction and significant order flow dynamics that support a more positive view, especially longer term. For instance, short interest is relatively contained, around 13.5%. That can actually limit downside risk because fewer big players are actively betting against the stock falling. More importantly, institutional net buying stands at 8%. And looking year to date, institutional investors actually increased their net purchases by 15%.
So big money is still flowing in, net.
It certainly seems so. Plus, AI-driven screening mentioned in the source shows IonQ's index inclusion weight is now at 12%. That's apparently among the highest in the quantum sector, meaning it's becoming a more significant holding in relevant market indexes. And one more point. Overseas fund allocation stands at 9%, confirming there's global capital flowing into IonQ as well. The report's perspective is that these strong order flow dynamics, when combined with the rhythm analysis, actually help refine those optimal entry points by signaling underlying large-scale demand.
What a fascinating deep dive. We've really covered a lot of ground today, from IonQ's major funding boost and their strategic plays in quantum, specifically that QKD network, all the way through the nuts and bolts of this VPAR rhythm analysis method, and even getting a feel for the online community buzz around the company. This report certainly provided a very detailed, quite unique rhythm-based lens for looking at an investment in such a highly innovative, potentially transformative sector like quantum computing, balancing those technical entry points with the company's financial health and that broader market perception.
Indeed. And I think this deep dive really underscores our core idea here. Knowledge is great, but it's most valuable when it's properly understood and, critically applied, especially in today's world with just so much information flying around. Being able to combine seemingly disparate things like precise technical charts, dry financial statements, and even messy community discussions to form a truly holistic view, that's essential. Critical thinking is key.
Absolutely. And that actually raises, I think, a final important question for you, our listener, to mull over. When you're evaluating a company like IonQ, right at the absolute cutting edge of quantum computing, a technology that genuinely promises to reshape entire industries over decades, changing how we compute, how we communicate, how do you reconcile that huge, expansive long-term vision with the kind of precise, almost tactical short-term rhythm analysis we've just unpacked? What's the right balance for you between believing in that